keep up to date with the latest technology news, you know that the momentum and investment has shifted from Asia to the Middle East. But gone are the days where countries like Saudi Arabia and the UAE just import technology and talent. The new trend across the Middle East is how to create a homegrown technology startup ecosystem, and that is what we're going to cover in today's podcast. Let's face it, money's not going to be an issue, but as we've seen from other countries, just throwing money at the startup ecosystem is no guarantee that it will be successful. To help us go through this topic, we're joined by the partner and co-founder of SparkLabs Group, Bernard Moon. SparkLabs has made a name for itself by launching successful accelerators and VC funds in the US, Australia, and Asia, and now they're entering the Middle East market. So let's see what has drawn SparkLabs to that region and what Bernard thinks will be the critical success factors to making sure that they get a return on their investments. Bernard Moon, welcome to the Tech First Asia podcast.
Thanks, Charles and Daniel, for having me. Looking forward to the conversation.
And yes, we should also say hello to Daniel, who's joining us as the co-host on this Middle East podcast series, who today I believe is joining us from Dubai. Is that correct?
That's correct. And it's always a pleasure to be here with you, Charles. Thanks for the opportunity and excited to speak with you, Bernard.
And I'm glad we got you both off of planes because you guys are both constantly flying around. So it's nice that we can actually get on a call, even though to be fair, for Bernard, it is past midnight now your time because you're in Silicon Valley.
Yeah, and I just got off a plane like an hour and a half ago.
Well, thanks for making the time. So let's kick it off. So let's talk a bit about SparkLabs Group, because many of the listeners, if they've been on before, they will have heard about SparkLabs. But for those who haven't, can you give them an idea about some of the breadth of the different types of initiatives and investments that SparkLabs does?
Yeah, so we're a relatively young venture capital firm, launched almost 10 years ago, 2013. And we're primarily seed and Series A investors, but we're best known, at least in Asia, for our accelerators. So we have these accelerators that follow the Y Combinator model. And then we have, on the other half, various venture capital funds. So we have a global seed fund that focuses on the US and Asia. We have a Series A fund for South Korea. We just recently launched with our partners in Sydney, a Series A fund there. Also, we have momentum. We have a Series B fund also for South Korea that we're launching. And then more recently, we've launched in the Middle East, SparkLabs Saudi Arabia and SparkLabs Abu Dhabi. And last week, we decided to add to our ecosystem a SPAC initiative that we started a few years back, but it was more thoughtful and planned out. We didn't want to follow the trends of doing quick flips or taking a Series B LiDAR company that should never go public. But we really are targeting not just companies within our portfolio, but within our greater network, companies that are probably one stage away from really going public, but need that additional capital. So generally, we're looking at Series D and E companies to potentially go through our SPAC process.
Well, definitely congratulations on the SPAC, because I know that's been in the works for a long time. So it was great to see it come out last week. I think it was a $100 million IPO. So quite exciting. The purpose of this, though, we are going to delve deep into what's going on with SparkLabs in the Middle East. And what I was hoping you could do is go a little bit more into that. How did these accelerator programs evolve? Like, how did it come about that you ended up going into Saudi Arabia and into Abu Dhabi? Who are you partnering on this, or who are you talking to? And what's your vision for these accelerators?
So going back a few years, before the Middle East, we were actually looking at expansion into Europe. So we were researching, and I was visiting Stockholm, Paris, Berlin, checking out different cities because we do our own internal studies of startup ecosystems by cities globally. And everything was put on hold because of COVID. So after we came out of that COVID time warp, towards the tail end of that, my co-founder was busy at work expanding his next sort of big hit. So my co-founder, Hanju Lee, he co-founded a company called Hostway in the US. Great story because they couldn't raise any venture capital in early 2000. But a decade plus later, when they sold it for around 500 million, they gave up very little equity. So he took a break. He was with us at SparkLabs. He went back into the game and started a cloud management company called Best in Global. And so that's also been on a rocket ship ride. And about a year ago, he closed $100 million plus Series D from different UAE companies. And so they already knew that he was a co-founder of SparkLabs and was asked to explore setting up a venture capital fund in the UAE. So that's when we started the process about a year and a half ago of launching SparkLabs Abu Dhabi. It's a little different focus in Saudi Arabia. It's focused on more Series B and C companies in the MENA region, and also with an angle of bringing also these sort of mid-stage ventures from Asia to consider setting up some type of operations in Abu Dhabi. SparkLabs Saudi Arabia, it started when I went to their FII conference last October, and I met a friend of one of our venture partners, Samir, who his day job is running a private equity fund in Pakistan, but he really loves early stage innovation and startups. So he told me, oh, you should meet my friend Ivan in Riyadh. So when I was there, met with Ivan and we hit it off, and he loved what we've been doing with SparkLabs. So he was like, oh, you guys should bring this to Riyadh, to Saudi Arabia, because it's great timing. Now they're looking more inward. They want to build the country and all the different industries from early to late stage and mature. And so we set up initial talks with the government, one government agency in December. And unlike some of the other government agencies that we've dealt with throughout the world, they came back with us basically with a verbal in a month. It was amazing. Like things in Saudi, I would say, move so quickly compared to a lot of governments within the region or in the world. And then next thing I know, at their big LEAP conference where 100,000 people attended this past February, we had a signing ceremony. They committed capital to fund our operations. And then now we're launching the first batch in a couple of weeks in Riyadh. So it was a very quick ride.
Thanks, Bernard. This is quite interesting. Being in the UAE in the last couple of years, I've seen the dynamic nature of the market as well. We've seen a lot of different VC funds coming up. And now you mentioned Saudi. I've been in LEAP both times, this year and last year. And a conversation is to be had on what you thought about LEAP, because it is absolutely insane. The amount of people in there and the amount of investment we're seeing on the tech sector. But knowing that you're responding well to this market, could you give me a little bit of a sense on how you're seeing the momentum and capturing the momentum and making sure that the right startups are coming to you? Because in this region, we've got a lot of startups getting in line. There is a lot of activity happening. So how are you putting in the right thesis out there to make sure you're attracting the best of the best there?
Well, I think it's a slow buildup. We've done this in other ecosystems. Luckily, we have a bit of a track record the past 10 years. So still relatively young in terms of a venture capital firm, but we've built up a pretty decent reputation. And also our focus is on finding good founders, but not just good founders from off the bat. It's also helping to develop the entrepreneurial ecosystem that's bringing in a lot of thought leaders and successful entrepreneurs, successful tech execs to Riyadh and to the region, and passing down that knowledge and their experience and training. So it is a slow buildup, and that's what we did in South Korea. I would say we were a factor in that startup ecosystem growing. And in Taiwan, we definitely were a driving force, right? Where it definitely even surpassed our expectations in terms of the type of companies, the type of entrepreneurs. We thought since there were so many traditional hardware companies to ODMs to semiconductor companies that there would be several years before we saw strong software plays. But even the Taiwan ecosystem surprised us because we saw the first year, second year, there were a lot of good software entrepreneurs that came out of the woodwork. And also it was us helping to nurture the ecosystem. So at the accelerator, and I would say seed stage, we do want to be collaborative players. And that's our approach, to just share knowledge with all entrepreneurs within the ecosystem that we have presence in.
So I'm glad you brought up the examples of Korea and Taiwan, because for some reason, I see a lot of similarities to what's going on right now in Saudi Arabia to when you entered those two markets as an accelerator program. There was money there. It probably wasn't being passed through enough. There wasn't that startup ecosystem. And it really wasn't working together. The whole ecosystem, supply, demand, and investment wasn't coming together. But you've been able to prove how that can change in Korea and definitely in Taiwan with the work that Edgar's done with the team up there. That's been a fantastic success story. So do you see a lot of similarities going in where you look at somewhere like Saudi Arabia, maybe they have the money to invest in this, they know they need to start growing a homegrown ecosystem, but they just need that guidance and someone who has experience in trying to create this startup ecosystem?
Yeah, I think that's correct. South Korea is interesting because they already had models from the 90s, right, of creating multi-billion dollar exits and unicorns. But when we launched, they really didn't have that culture, right? Because it's cited by various people and journals and research. What makes Silicon Valley, or that secret sauce is that pay it forward culture. That's what we focused on bringing to South Korea when we launched, because they already had models of several multi-billion dollar tech companies. And there was already the culture that was changing South Korea in terms of being more flat. Because South Korea is very similar to Japan. It's a strict Confucian hierarchy, unlike China. And I call it like this crutch for the weak, this sort of ageism. Like you're 1 year older than someone, you immediately have to receive respect from someone younger than you. But the internet from the 90s really started changing that culture. Obviously, it's still there and still prevalent, but we focus on the cultural aspects of how we could impact South Korea and also even Taiwan. And so those are some of the things that we'll focus on in Saudi. It reminds me more of Europe than South Korea, because South Koreans had this mentality, oh, if someone's smarter than us or more creative, we could just outwork them, right? You'll have Samsung make beds in their offices so engineers sleep there and work 100-hour weeks.
That's not that much of a stretch. I've spent a lot of time at Samsung in Korea, and I know a lot of people there. That's not a stretch.
Yeah, I know they literally have done that. And then I remember our startups working with some established luxury goods companies in Paris. And they'd be like, what's up with these guys? They go to the office at 10 a.m., they take a 2-hour lunch, and they're done at 5. And so I would say that's more similar to some of the work culture, not all, but some of the work culture in Saudi Arabia. So that's what we're trying to also bring to it, is a certain level of drive, but also commitment to paying it forward, right? Not even the culture in LA is very different than Silicon Valley, right? In Silicon Valley, people they open up their Rolodex or contacts to each other. In LA, it's generally, especially because of the Hollywood culture, it's very guarded, right? So each city has different cultural aspects that aren't helpful for a startup ecosystem. So that's what we try to identify and try to combat and change.
And now when you look at the Middle East, and it is quite an exciting time because there's so much going on there right now, do you see any potential risks maybe that are out there, or specific opportunities given the state of time that we're in, where there's a lot of investment, a lot of attraction going in there, where the MNCs are coming in? It seems like half the people I know have now left Asia to go work in the Middle East. Do you find that this is a unique time for this region?
I think it is, because obviously a lot of the countries here are already started on changing from an oil economy, and because that time is limited. So there is a sense of urgency, not across all the countries, but I would say a lot of them, right? And Saudi Arabia is one of them, right? Maybe before it's projected 40, 50 years. And the timelines are always changing, but now it's maybe 20 to 30. So they're looking to build up new industries and find entrepreneurs or encourage entrepreneurship to create new ones, right? That maybe they didn't know about. So I think we're one cog in the wheel, but hopefully we'll be able to make an impact over the next decade.
And do you think there's a bit of a benefit because it is greenfield still for accelerators? There has been a few tried out there, but it's basically just a brand new space to go into. Is there a benefit from going into that? Or do you think it's easier if you go into one where there's a more structured infrastructure and an ecosystem already set up?
So, like I said, that's our reputation now. Whether South Korea obviously had a lot of the elements, but we did help take it to like the next stage. Taiwan is very nascent, and we went in there. SparkLabs Cultivate in Sydney, we went in there also to help encourage the entrepreneurial ecosystem. So I think we've built a good track record, not just in terms of ROI and other metrics. And we've done very well in terms of whether it's accelerator metrics like follow-on rates for our graduates and ROI, but also the larger metrics in terms of encouraging entrepreneurship and creating excitement.
So Bernard, talking about the Middle East again, and I've been quite amazed, like I said, with what's happening in Saudi Arabia. So let's focus a little bit on Saudi Arabia. So in the past couple of years, or maybe longer, in the past 5 years, and we've been working very closely with the Saudi government to bring all the multinationals, like Charles was saying, we have a mandate as Nokia to move our headquarters to Saudi. So there is a lot of focus on bringing in talent and making sure that they're also fostering new talent and building technology locally. I'll give you an example. I was speaking to somebody in the Saudi government, and they were talking about what we can do to establish a presence, and they having the first go at any technology outcomes that they have in the country. So it's really important for them to bring local organic technology products from Saudi. So given your experience and how you develop the ecosystem, what do you think Saudi Arabia critical success factors will be? How would they achieve this in your view? And how do you see this developing in the next 5 years in line with the 2030 vision that Riyadh has, for example?
Yeah, I think we had a discussion in terms of what type of metrics that we might see over the next 5-10 years. And we just said, let's wait a year and see. And it's not a cop-out answer to you. I think we're still trying to get a deeper knowledge of the market here, of the entrepreneurs, of the industries, of even the universities, right? What type of strengths they have at the research level. So as we try to figure that out, our own goals are very sort of small, right? We want to just bring in the best people globally into Riyadh and encourage more startup activity. And what that means, it doesn't have to be directly in our accelerator, but just to see an uptick of entrepreneurship. So again, we haven't set any sort of metrics at this point. It's a little too early for that. But that's our approach. We definitely have a long view on it. We'll just wait and see a year out.
Maybe just a quick follow-up. We said universities. How do you find the overall academia being part of this in Saudi today? Do you see them quite responsive as well to what you're seeing within the ecosystem? Or is it a bit more of a pull at this time into the academic world in Saudi?
Yeah, so I had a discussion with one government official and just describing how academia functions, especially working with quote unquote outsiders. The universities there are very similar to universities in the US and even in Europe, because we back several startups that are led by professors. I think really, and without exaggeration, probably Stanford is the only university, at least in North America, that is conducive to startups and doing it the right way. Even Berkeley, that's an hour away, it doesn't get it. Or a lot of the professors in the schools don't get it. And what I mean by don't get it is sometime we dealt with actually a professor that spun out of a UK university. The university was asking for 40 to 50% of a company, right? And as if you take too much of the cap table early on, it doesn't create the incentive for the founders and actually the whole company itself, right? So it's not just a university. And then sometimes if it's a graduate student trying to spin out his research from a professor he was under, some of these professors globally, it doesn't matter whether in the Middle East or Europe or Asia or the US, they'll ask for 20 to 40%. Right? And a lot of the professors that get it are the ones that know, I can't take too much. It'll be less than 10% because I don't want to create that disincentive for the founders. We did find out it's just a common phenomenon throughout all cultures. These financial structures actually can't dictate when an entrepreneur leaves. So I think that's important. And that's a discussion. So it's a long-winded way, but going back to my conversation with the government official, he was like, how can we really work with these universities so they get it? Mm-hmm. So we had this discussion how some universities in the US, they have innovation centers, but they should have the right guidelines around that. But then will the universities accept if they only get the small portion, right? Because initially they think, oh, it's under us. We should take the lion's share. It's like angel investors in China, whatever, 20 years ago that took like 60% of a company or something.
We had problems with this in Singapore as well recently, where you had certain people going out and offering professors or grad students like pretty low sums, like 25 to 50 grand, but they would want 25% of the company. And it just messes up the cap table. It becomes uninvestable going forward because the cap table's a mess from the beginning. And that's for basically doing nothing. Those companies all stagnated because no one would touch them afterwards because you have to restructure it.
Yeah, it's just that's how ecosystems develop, I think, because I remember in my second startup in Korea in 2000, we were backed by SoftBank. And then it was my first time living in South Korea as an adult, and I met so many angel investors at that time because they were just like old money guys or real estate people or whatever, or people in finance. And they didn't get it. They didn't value IP or the entrepreneur. So even in South Korea, early 2000s, a lot of these angel investors, they would take 50, 60% or more of a company for their initial few $100,000. And it took 10 years for that to adjust and for everyone to get it. And so we've seen that in other ecosystems. Example is even in India. This was about, I forgot, it was less than 10 years ago. One of my wife's former colleagues, I could say this, I guess he joined Sequoia India. And he said that they were actually forced to go to the seed stage because they were focused on Series A. But a lot of these angel investors in India were also taking 20, 40, 50%. So they were forced to play that seed stage game to correct the market. So
I want to do one slight segue here because since I have you on the line, I love asking this question to people who've been in the venture capital industry for a long time. You would literally have looked at thousands of startups over the years, whether it's for your programs or for companies to invest in. What do you look for? Are there any certain characteristics within companies, and maybe not the technology side, but what do you look for in a company that you say, yeah, we want to back these guys?
I'm sure you get different answers from investors. The three general buckets are team, product, market. Most founders could answer the market question. That's pretty easy. And then it goes really into diving into the product, right? Whether it's consumer or enterprise, whether you think it's really a must-have versus a nice-to-have. And then the more difficult part, especially at the seed stage, because you usually go through all the kinks by your Series A or B. The seed stage, it is really hard to identify if this entrepreneur has the right characteristics, whatever that means. It's the soft issues that's really difficult as an investor. And that's probably across the board, right? For a lot of things in terms of coaching, like high school teams to pro teams, like chemistry does matter. And it's really hard to read because you think you have found these entrepreneurs that are awesome, whether they're from Google or established company, or maybe they had some successes and then they work with some people that they met and they try to build this company. And I don't think there's any exact metrics because it's so hard to measure, but at least a third of startups fail because of this breakdown of trust and chemistry in the founders. And so that's really hard to read. We've seen companies where, and I've experienced it in my own startups, where people are awesome on paper and their resumes are awesome, right? Their references are awesome. And at, let's say, a McKinsey or Google or Meta, they might have been A players. But when they're in that startup environment and where it's constant either panic mode or ups and downs, then sometimes a different characteristic comes out, right? They used to be the best sort of corporate team player, but when more is at stake, all of a sudden you see this nasty side that comes out. Some people stay the same, but some people, it just comes out and they're like backstabbing their founders or whatever.
So we'll put that down as a big red flag.
Yeah. And then also just going back to like metrics, I think every investor has different metrics in terms of what they look for in terms of either revenues or daily active users and how often they actually use the application, if it's a consumer play, et cetera. So I think that all varies, but there's some people have sort of baseline numbers and stuff.
I love how you explain the founder situation, right? I think you startups here, you see the dynamics completely change. Actually, people who've been in corporate environment forever and then they get out there, I think the challenge is very different. But let me ask you something here. I like the fact that you've got some expectations set for yourself in this region in Saudi Arabia, but there's a lot happening. So if you really were to put a mark in the future and say, what would it take for a SparkLabs program to be successful in this region? And I know you've got some humble goals, let's call them, as you said, small goals. What would be the big vision for you, let's say 5 years from now? What would you look at as success? And maybe also, what have you seen in your other markets where you have been in Korea and others that could potentially be of some learning as well?
I would say our goal within 3 to 4 years is to be the leading accelerator in the MENA region. That's what we did in South Korea. When we launched in December 2012, our first accelerator, it was already a fairly crowded market. I would say it was about 20 accelerators. And then it took 2 years, but we became the leader there. Now there's, real accelerators, probably there's maybe about 50, 60 in South Korea, but we're the clear leader there. Taiwan, I would say it was probably a shorter time cycle. I would say in about a year and a half, we became the leading accelerator in Taiwan. And also now we're the leading accelerator in Cultivate. Like I mentioned, like metrics such as follow-on rate, we hover around 70% of our companies, of our graduates get follow-on funding. Depending on how you measure it, I would say we're right now for sure top 3 in the world. In terms of other metrics like ROI, our funds have done very well. And just in terms of, I would call it shallow marketing, South Korea, we've built it up to the largest accelerator demo day in the world. Like over 3,000 people attend our events, our half-day events twice a year. Taiwan, it's also become anywhere from 1,000 to 1,500 people attend their demo day events. It's also one of the must-see tech events in Taiwan and in South Korea. And also Cultivated, it is the largest accelerator demo day there. It's about 600 people attend their demo day events. So we have the same expectations actually in Saudi that will make it their demo day a must-see event within 2 to 3 years.
Very good. So now I want to switch tack a little bit. And we've talked about the positive sides, what it's going to take to create the ecosystem that you need in the Middle East. But let's look at an example where maybe things haven't worked out too well. And that's where I'm at, and it's in Singapore. And if you go back pre-pandemic, and I know, Bernard, you're going to know this very well, and Daniel, you will as well, because you were living here then. It was like startup frenzy here for a while. You had 150 different incubators and accelerators. Enterprise Singapore, which is backed by the government, had invested in about 40 to 50 of those accelerators, yet only a few delivered any value. You fast forward to today, they're basically all gone. There's hardly anybody here, and the buzz has really gone away. So yes, there was a pandemic in the middle, so that was damaging. But what else do you think? What mistakes did Singapore make when they were going about this? Was there just too much money out there? Was there just not enough talent? Was it Singapore's too small of a market? What can they learn? Because Singapore should have been able to really bring their environment out there and grow it. And instead, it's basically shrunk back in.
Yeah, I don't know the details of how they funded all those accelerators, but I will say just as an outsider, because when we launched 10 years ago, we did look at Southeast Asia and Singapore. And one is, I would say they funded way too many accelerators without actually vetting them well, right? They should have probably done it in tier phase. There's so many accelerators, I can say this now, and they were like junk programs when I would visit them. So a lot of times they weren't experienced founders or even tech execs that ran some of those programs. There was this fury of activity on the accelerator side, but there wasn't the proper funding at the Series A, and for sure at the Series B. I think still Series B is probably missing in Southeast Asia. I think they should have been a little more thoughtful and strategic before just throwing a bunch of accelerators up in the air and seeing what sticks. So, yeah, I mean, it's like literally not just throwing one handful onto the wall. They were literally like throwing like 10, 20, 30 handfuls and seeing if it turns out pretty or not.
There was a lot of them. They were just getting, all the money was going into OpEx. They'd have a little bit of money to invest, but most of it was just running it. It just seemed like it was a bunch of boondoggles. Like people could go out there, you could enter a program, they'd throw a party, and then you're on your own. And I know a couple of startups here, they've been through 4 and 5 different accelerator programs already. And I'm like, well, maybe you should be looking at which ones you're going into if you're just constantly hoping the next one's going to take you through.
Yeah. So I just didn't, I don't think, again, they were that strategic in their approach, or they just didn't know what they're doing, right? Because you have some of these government officials, they never did a startup on their own. They don't have the right experience or knowledge base. So they didn't really know what should be funded, what shouldn't be.
And just throwing money at a problem doesn't always solve it, which is why I'm very curious to see how they're going to be able to do this across the Middle East, because they will be looking at Singapore and probably saying, okay, what can we do differently to make sure that it doesn't just fade away or go very quiet? How do you maintain that momentum? How do you incorporate it into the environment, build out that ecosystem where they're not only having great technology companies coming in there, but they're creating their own and they're leveraging the emerging tech and they become a major player going forward?
Yeah, I think they have looked at Singapore, but they also looked at actually South Korea a lot. So they told us that some of the agencies in South Korea, they looked at very closely and followed.
I think it's similar. It's not too different in the UAE. You wouldn't find tons of accelerators in the UAE. It's quite condensed in what they're doing as well. So I think it's good learning that's coming into the region. So this has been quite an exciting discussion on getting the ecosystem going in the region, honestly, and on coming from sitting here in the region, looking at all of the startups. It's good to know from you, what is really a startup looking at when they want to enter SparkLabs? Of course, you talked about what you look for, great founders and so on. What do you think startups need to do in this region to be part of SparkLabs?
Yeah. So I think now, especially in Asia, we have established reputation where a lot of our graduates, our entrepreneurs refer companies to us. So we built a good reputation for various reasons. One, we have a pretty extensive network with various VCs globally. So I would say a fair amount of entrepreneurs say that we're good at fundraising, right? Probably half our core team has led product when they're doing their own startups. So we're also good at product feedback and helping them at the very early stages. And then in terms of just the global network that we built out, whether it's a company called MimiBox that was in our first batch, we helped them when they were first initially looking at Japan, and then they switched over to the US, and then they also expanded into China. And then when they had a presence in Taiwan, we actually introduced them to Edgar there. So now as we grow our global network of not just our accelerators, but just the mentors that we have, the different advisors and even LPs, it's a very collaborative and healthy culture. Edgar in Taiwan, he doesn't, just to be transparent, he doesn't have carried interest in our funds in Korea, but he's more than happy to help out our portfolio companies in South Korea as they look into Taiwan and vice versa. We're very helpful of his portfolio companies, whether they want to enter the US, South Korea, or now the MENA region. So I think we've built up this reputation for adding value. Like every investor says, oh, we add value, or they say that we try to add value, or the petty ones, they try to knock down other VC firms and say, oh, they don't add value. But I think we add value. And I think it's also proven in terms of the companies that apply to our accelerator, because now we are I would say like a mini YC in Asia. We just don't get bootstrap companies. A lot of companies that apply, they've raised $1 million, $2 million. You have outliers that raised a company that raised a $20 million Series B, applied to Taiwan. One of our portfolio companies, Genji, which is started by Kevin Chow, actually two of the co-founders of Kabam, it's an esports play. They raised a $30 million seed round. And they came to us and they asked us to be part of our accelerator program in South Korea. So I would say more than 50% of the companies that now apply to South Korea, they don't need our 100K. They don't need our capital. They want access to our network.
I like that answer a lot. That's a great way of looking at it. We focused this conversation a lot around the accelerator side of it, but we'd be remiss if we didn't actually cover what happened last week as well. And since we got you on the line, is a perfect time to talk about your $100 million IPO of the SparkLabs SPAC. So can you give us an overview about how this came about, what your intentions are, and what you hope to achieve with this over the years?
Yes. When we looked at all the sort of craziness of the SPAC market, we are a bit of a Boy Scoutish group of partners. So we thought, we could be a good player within this ecosystem. we would make fun of these companies that were like Series A, Series B companies and seek to go public via SPAC. And also we saw different business plans or pitch decks could be like 3 private equity guys. And they say that, oh, we have a database of 10,000 companies that we could access. I was like, a database? What does that mean? They don't have the real relationships. And that's why you saw towards the tail end of the craziness of so many SPACs expiring and shutting down because they didn't have the relationships. And I think it made sense for us because we're not like YC that has 100, 200 companies, or even some of the other accelerators, they have like 50 companies per batch. No, we've still kept it. And it's our mantra to keep each accelerator batch at 10 to 15 companies, because we really want to make an impact and build a relationship with the founders that we work with. So we've still grown it to almost 500 startups globally across 6 continents, but it is concentrated in Asia and the US. So we thought we could be a good player, create an exit possibility for some of our portfolio companies, but also a lot of companies that we come across through our co-investors or our LP base. So we let that be known, and we've gotten a very strong response even before we went public. And now, because our SPAC IPO was, I would say, very successful in a tough market. We are oversubscribed 6x. We had over 600 million in demand. And our bank, Cantor, said that the terms were the tightest or not as favorable for investors. It was the tightest terms in 3 years that they've seen. And we still got 6x. So I think it was a good response. They said that from some of the investors that they really like the story, that we do have this global ecosystem that we're growing.
Congratulations on that. That sounds really exciting. I think it's fantastic to see that you got 6x. And based on what you said right now, it looks like it's not often you hear, like you said, in the last 3 years, the bank said that they haven't seen something so tight. That's a very interesting comment.
We've seen this market really, there was the big heyday a few years ago where everybody was talking about it. It's gone relatively quiet, but then when yours comes out, it is oversubscribed, even with the tight terms. So it shows there is a market there for it if it's done correctly. And I think that's the important part. People know what they're looking for in it, and they're going to look to somebody that they actually trust to do it. And it sounds like SparkLabs has done a great job of actually building up that trust within the market.
We've done well on the reputation building part over the past 10 years. We've turned away money in certain locations. We've seen some VC funds or accelerators just chase the dollars and plant their flag in multiple countries. But I think we've been thoughtful. It doesn't mean that we haven't made mistakes. We've made mistakes in terms of bad hires like any company, or we had this accelerator with a large corporate in China that was more of a headache. We've made mistakes here and there, but yeah, I think we're at a good place right now. And so our core partners, we're very excited over the next 10 years and what that has to bring, not just in the Middle East. I think in a few years, we'll look forward into also Europe and other sort of different types of funds.
Okay, very good. Bernard, thank you so much for staying up late with us again. I know last time I had you on the podcast, we did the same thing, but I know whenever we've had chats in the past, it's always past midnight your time, and I have no idea how you do it. But thank you very much. What if someone who's listening in the audience would like to get more information about your accelerator programs, whether it's in Taiwan, Korea, Saudi Arabia, or Abu Dhabi? How can they find that information out?
They could go to our website. We have actually multiple websites, so it gets confusing, but the primary one is SparkLabsGroup.com. And they could email me. It's Bernard, SparkLabsGroup.com.
And what I could do in the show notes is I will put in some of the different individual accelerator programs emails. So if somebody wants to just contact them directly, they can do that as well.
Yeah, that'd be great. Thanks.
And Daniel, thank you very much for co-hosting again. Any final thoughts from you?
No, thank you. This was very exciting. I think it's great to see you guys in the region, and I am looking forward to seeing you at LEAP next year.
Yeah, we should get together.
Hey, road trip. All right, well, I'll meet up at LEAP. That sounds like a great plan. Thanks for tuning in to this episode of the Tech Burst Asia podcast. If you like the podcast, make sure you subscribe and click like. And if you didn't, well, you probably didn't make it this far anyway. Talk to you next time.